Hello everyone and welcome back to Markets Analyzers. Today Nifty fell by 218 points and closed at 24,795. Today all the indices were mostly on downside. Bank Nifty fell by 1.9%, small cap and mid cap indices also fell by 2.7% and 2% respectively. So it means the selling was across the board. Large caps, small caps and all the stocks took a hit. Small cap stocks corrected in major way today. Actually, today during the market opening, before opening, there was actually positive news updates around the globe. Asian stocks were on fire, Japanese Nikkei index leading the charge with a whopping 2% surge. It was mainly attributed to the impressive US labor data, which was released on last Friday. The economy added the most jobs 6 months, so it reduced recession fears and sent a strong signal that US economy is still going. As a result, the US dollar has reached a 7 high against the yen, Japanese currency, hitting 149.10. This is a significant milestone, guys. The dollar strength is a clear indication of investor confidence in the US economy. Due to all these reasons, there was a stability in the opening. If you look at today's opening, actually, Nifty opened with gap up. The stability in the beginning and then Nifty coming down is happening from last 4 trading sessions. But today, markets fell despite having good positive global cues. Our markets fall can be attributed to 3 main reasons. And by the end, I will also tell the biggest risk factor. What I think is out of 3 reasons, the first reason is the Chinese stimulus, which has gained investors' attention in the past, with the Hang Seng Index rising 26% in September. This comes after China's central bank unveiled a series of measures aimed at revitalizing its struggling economy, which has been weighing down by a property sector and debt crisis, rising youth employment, and weakening demand. The People's Bank of China announced key steps, including lowering the reserve requirement ratio, cutting the policy interest rate, and reducing the market benchmark interest rate to stimulate growth. The market participants are worried about the risk of likely shifting serious FIS money from India to China. This could also be true. If you look at FIS data in this, net sellers of around 40,000 crores. It's a huge, staggering amount. Today alone, they sold around 8,293 crores in the markets. This is a very valid reason. We can't just cancel out this reason. In the past few days, FIS selling has been intensified. Similarly, in the same time, our markets are also falling down. On the other side, if you look at Chinese market, in the past 1 week, Chinese markets gave positive returns of 9%. It's just in 1 week. Whereas our Nifty fell by 4.8% in the same time. If you look at monthly data, in last 1 month, Chinese Hang Seng Index gave staggering 34% returns. If you compare it with Nifty fell by 0.5% in last one. In the period where our markets are not performing, the Chinese markets are doing very well. In this context, it is a valid point. But I think personally, yes, there might be some short-term fund movements into the Chinese markets, but India is not a place to avoid. There could be few months of low funds, but for longer time span, definitely we are better positioned in terms of growth than China. The second risk factor is the geopolitical tensions and earnings disappointment. The growing tensions in the Middle East, which has also tipped off a spike in crude prices, have also dented investor sentiment in domestic market. And media reports suggest that Israel is planning for a major attacks on Gaza and Iran. Market experts are likely to be worried if the Israel army starts significant attack on Iran in response to recent Iran's ballistic missiles launch on Israel. All this caused spike in oil prices in last week, and India is the net oil importer, though Brent futures still trade below $80 per barrel mark since August. Any major increase in oil prices from here on will create the risk of input cost and inflation for several domestic companies from sectors like paint, tires, aviation. The next key event to focus would be on September quarterly earnings season, which will start from next week. Tata Consultancy Services (TCS), along with Tata Elxsi and Avenue Super. The management commentary over the macroeconomic recovery post is Fed rate cut and demand outlook for 2025 will be the key to watch. So this management commentary will further set the tone for our markets. Finally, the third reason is higher value. Recently, Money Control conducted a poll asking their viewers about the biggest risk factor for our Indian markets, and majority of them told it is higher valuation. Already our markets are trading at 26 times P price to earnings compared to historical value 21 times price to earnings. So disappointing results can create negative sentiment. They warn that while past returns have been these gains could evaporate once stock prices realign with fair value. If really market starts to fall, try to find great quality stocks and add them. The only thing we can do. It is impossible to time the market, and we really don't have to do the impossible things. Do not worry about the market fall. My job is to tell you the things which are happening globally. I think I have done that. So now coming to Nifty price action. As soon as you see the chart in any time frame, it could be daily, hourly. Two things are very clear to me. First is Nifty is not in uptrend, and the other one is Nifty is not in consolidation mode. So then obviously the price action is indicating downtrend, and we don't have to analyze much to know this. Just open the chart. Clearly Nifty broke previous swing low of 25,300. Okay, now Nifty is in downtrend. Will it fall again? Nifty should close below. Okay, Nifty is in downtrend. Will it fall again? Is a big question. Nifty should close below 24,730. Then we can expect fall up to the next level of 24,440. I want closing below present support level, because last time when Nifty came to this level, Nifty took support from this level and rallied upside by more than 6%. So this is an important level. And finally, let's talk about option chain range for Nifty and move on to the stocks. The likely range for Nifty is 25,300 on top side to 24,400 on down. 24,400 to 25,300 is the likely range for Nifty until next weekly expiry. So next, let's move on to stocks news updates. First, let's begin with OLA Electric. The stock price has hit an all-time low, dropping over 9% today. This means that investors are selling their shares, causing the company's value to decrease. The main reason for this decline are ongoing problems with servicing OLA electric vehicles and losing their market share to competitors. In simple terms, customers are not happy with the after-sales service, and the company is struggling to keep up with other vehicle manufacturers. As a result, investors are losing confidence, leading to a decline in the company's stock price. I think it's happening due to overproduction without properly setting up service and repair stage. Next, let's discuss about Tata Motors. India's leading electric vehicle EV manufacturer is considering a new pricing model called Battery as a Service (BaaS) to make its series more affordable. Under this model, customers can buy an EV without battery, reducing the upfront cost by around 25 to 30%. You buy an electric vehicle without the battery at a lower price. You pay a monthly rental fee for using the battery, calculated based on how many kilometers you drive. For example, let's say you drive 1000 kilometers per month and the rental fee is 3 per kilometer. Monthly rental fee comes around 1000 into 3, which is 3000. You will pay 3000 per month to use the battery, in addition to other expenses like electricity for charging. This model helps reduce the initial purchase price of the EV, making it more affordable. However, your monthly expenses will vary depending on your usage. This model helps reduce the initial purchase price of the EV. Instead, they will pay a monthly rental fee based on their usage per kilometer. This move aims to increase EV sales, which have declined in recent months. The BaaS model has already been introduced by MG Motor India, and Tata Motor hopes to regain its market share by offering this option on popular models like Tiago, Punch, Tigger and Nexon. By separating the battery cost from the vehicle price, Tata Motors aims to make EVs more competitive with traditional petrol-powered cars. The key benefits are reduced upfront cost. The upfront cost will be reduced by around 2 to 3.5 lakh and lower monthly expenses because we'll only pay rental fee. Let's wait and see how this will pan out. Next, finally, let's talk about Titan. Investment firm MK Global Financials is recommending investors to buy the shares of Titan, predicting the target price of 4,400 per share. This optimism is based on Titan's impressive Q2 performance, which exceeded expectation. The key highlights are jewelry sales, which grew by 26%, beating the expectations. The expectations were around 15% growth. Next, watch sales, which increased to mid-teens. The growth is likely due to a significant duty cut. The revenue mix is slightly weaker, but high margin studded segment growth remains strong, which is approximately 25% of overall growth. MK finally believes that Titan will maintain its jewelry profit margin of around 12% for the financial year 2025. This positive outlook is expected to address investors' concern about slowing growth. So according to them, the earnings will increase by around 4 to 5%. MK's buy recommendation and revised target price of 4,400 per share reflect their confidence in Titan's future performance. So friends, this is the end of today's video. If you found the content informative at any stage, please don't forget to like the video and share the video with your friends and encourage our work. Do consider to subscribe our channel Markets Analyzers I will come back again with another interesting video. Until then, have a great time.